As a business owner, you're likely well aware of all of the threats to that business.
Employee turnover grinds down the productivity of your company as a whole, but the loss of a key person can have a much larger impact. So how can you protect your business against the loss of a key person? First, who is a key person? Key people are crucial assets to a business, yet are commonly overlooked and unaccounted for in risk assessment. Key people are those who are vital to the business's ongoing overall success, and often include owner or owners and top executives and employees with unique skills or knowledge, or those that contribute significantly to the company's revenue. In the event that a key person leaves the company, either due to death, disability, retirement, or termination, the loss is a huge liability that can create a major economic risk for the company. This can comprise of the costs to replace the key person, to train a new employee, loss of sales or contracts, and the overall loss of revenue, and may result in the need to use assets or current cash flow to offset loss, creating financial instability. With a key person policy in place, a business can use its current cash flow to pay after-tax premiums on a life insurance contract, ensuring the life of the key person. The policy is structured with the business as the owner, premium payer, and beneficiary. Now, if the key person dies, the business can use the tax-free death benefit to cover the liabilities and reduce the economic risk. With permanent life insurance, if the key person leaves for any other reason and the policy is sufficiently funded, the business has access to the cash value. Also, in the event of critical, terminal, or chronic illness, the business may be able to access funds through the accelerated benefits rider. All of this income tax-free. So if you're looking for key person income protection, contact us today.